Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Brazilian steelmakers trade group IABR on Monday said the United States is pressuring Brazil to reduce its exports of unfinished steel, part of a long fight between both countries. They have threatened us, IABR President Marco Polo said of the United States. If we don't agree to tariffs, they will lower our quotas, he told reporters. Brazil and the United States were engaged in a trade spat last year when U.S. President Donald Trump said he would impose tariffs on Brazilian steel and aluminum in a bid to protect local producers. Washington has been seeking to reduce the quota for Brazilian steel exports since at least 2018, Reuters has previously reported. IABR also disclosed production forecasts for the year. The group expects brute steel production to fall 13.4% during the year and for domestic sales to fall 12% by year's end compared with 2019.
Moving on to the top news in the energy sector.
Top U.S. and European oil and gas companies are forecast to swing into a second quarter loss after coronavirus lockdowns destroyed fuel demand, hit prices and squeezed margins, analysts said, and Refinitiv Icon data showed. The expected rare losses for BP, Chevron, Eni, ExxonMobil, Royal Dutch Shell and Total follow a collapse in oil and gas prices and demand to levels not seen in decades, creating a perfect storm for the energy companies that produce, refine, trade and sell fuel. During previous price slumps, integrated oil producers' results were boosted by refining operations whose margins typically benefit from low oil prices and provide an internal hedge. But as travel, industry and business were all halted by lockdowns, margins for refined oil products, such as gasoline, diesel and kerosene, dipped into negative territory.
We will now look at the top news in the agricultural sector.
South Africa will likely harvest 37% more maize in 2020 compared with the previous season after favorable weather conditions boosted yields, a Reuters survey of 6 analysts and traders showed on Monday. South Africa's Crop Estimates Committee is expected to forecast the 2019 and 2020 maize production at 15.461 million tons, up from 11.275 million tons harvested in the 2018 and 2019 season, which was impacted by dry weather conditions. The estimate is slightly lower than the CC's June forecast of 15.514 million.
Next we have agricultural price moves.
U.S. soybean futures fell as much as 1.5% on Tuesday to hit a 12-day low after the U.S. Department of Agriculture said the condition of crops were well ahead of market estimates, reinforcing expectations for a sizable U.S. harvest. Corn fell over 1% as favorable U.S. weather conditions were seen boosting prospects for the crop, and wheat edged lower, also pressured by hefty global supplies. The most active soybean futures on the Chicago Board of Trade were down 1.4% at $8.86 minus 3/4 a bushel by 10:30 GMT, having earlier hit $8.85 minus 1/4 a bushel, the lowest since July 16. The most active corn futures were down 1.1% at $3.30 minus 3/4 a bushel, while wheat slipped 0.1% to $5.27 a bushel, after closing 2.2% lower on Monday.
We will now take a look at energy price moves.
Oil prices were steady on Tuesday, with demand worries due to a rise in coronavirus cases worldwide, undermining support coming from hopes for additional U.S. economic stimulus measures. Brent crude was up 7 cents, or 0.2%, at $43.48 a barrel at 10:52 GMT, while West Texas Intermediate U.S. crude fell 19 cents, or 0.5%, to $41.41 a barrel.
Moving on to metal price moves.
Copper prices slipped on Tuesday after workers at a mine in Chile signed a new labor contract, lifting concerns about a strike, while economic worries were renewed after an uptick in coronavirus cases. Benchmark copper on the London Metal Exchange was down 0.2% at $6,408 a ton at 11:07 GMT, though still close to a two-year high of $6,633 reached on July 13. LME aluminium was up 0.2% at $1,710.50 a ton. Zinc fell 0.9% to $2,217.50. Nickel slipped 1.3% to $13,540. Lead was up 0.2% at $1,854 and tin was 0.6% lower at $17,920.
Finally, we have the most recent news on the financial market.
The euro retreated from its two-year high on Tuesday as dollar sales declined before a two-day Federal Reserve meeting, during which investors expect its outlook will be reaffirmed. No monetary policy changes are likely, but traders are speculating about a change in emphasis in the Fed's forward guidance at the meeting, which starts on Tuesday. Some dollar weakness came amid political wrangling over the next U.S. fiscal rescue package. The Republican leadership of the U.S. Senate introduced a proposal for the next coronavirus relief package, a $1 trillion plan called the HEALS Act. The euro was last trading down 0.2% at $1.1732, off the $1.1781 two-year high reached the day before. The Japanese yen rose 0.2% versus the US dollar to 105.18, while the British pound slipped 0.1% against the greenback to $1.2868. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.